stocks rebound on Wall Street with the Dow surging over 400 points. The Nasdaq Composite and S&P 500 snap a 4-day losing streak ahead of the CPI data on Thursday. Asian markets are largely lower. The GIFT Nifty suggests a negative start for the Indian market. Oil prices are off 4-month highs as the summer rally takes a breather. Brent hovers around $85 a barrel. Gold prices slip as well as comments from U.S. Fed Governor Michelle Bowman on additional rate hikes dent sentiment. The Reserve Bank of India's 3-day Monetary Policy Committee meeting will begin today, and 100% of the participants in a CNBC TV 18 poll vote for a status quo policy and no more rate hikes in this fiscal. The decision is due on the 10th of August. Market regulator Sebi to review rules governing the futures and options segment. In its annual report, Sebi says it will review eligibility criteria for introduction and continuation of stocks in the F&O segment. And in important earnings to track this Tuesday, watch out for numbers from Hindalco, Coal India and Adani Ports. Also, Siemens from the broader market will be an important number to track. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into this Tuesday morning. There's lots to talk about. But first up, let's take a look at the Asian markets, because in spite of that sort of strong rebound that we got in the US, most of the Asian markets are trading with some cuts. And, that's been pretty much the theme ever since the word go. So the Seng is seeing the biggest cut right now. That's down a full 1.5%. The Taiwanese index also seeing cuts of around 0.3%. So Seng is the worst, but apart from that, it's not too bad. So the Kospi is down around 0.2%. You have the Shanghai markets down around 0.25% as well. And there are a couple which are holding up with some gains. So the Nikkei market is seeing gains of, just around 47 points. So not too much, but it is holding up in the green. You also have the Straits, which is seeing just a minor green tick right now. The GIFT Nifty will come up for you, and it is indicating that the start for our own markets could be a little bit lower. So around 35 points lower is where the start could really come in for our own market. So that's what's happening in Asia. But let's also talk about the US market, because we did see Wall Street begin the week on a very strong footing. The Dow surged over 400 points, and the S&P 500 as well as the Nasdaq, saw pretty good gains come through. So the S&P 500 was up around 40 points, and Nasdaq as well saw gains of around 0.6% as the close. Now, in more action from the U.S. market, we had shares of Berkshire Hathaway, which rallied to record highs following a very strong earnings report that came through. But on the other hand, you have shares of Tesla, which came under pressure. And this after the company's chief financial officer stepped down from his position effective today. So Tesla's chief accounting officer, who is Vaibhav Taneja, was appointed as the new CFO. That's some important news to track as well from the U.S. markets. But speaking of the U.S., let's also listen in to Gabrielle Santos from JP Morgan Asset Management, global market strategist, talking about her expectations for the upcoming CPI report. Listen in.
Do you think soft landing hopes have really been justified? The probabilities have moved higher. The real economy side is looking good. Demand is just normalizing, not collapsing, at the same time that you have this disinflation process. And we do think it'll continue without the Fed needing to tighten policy further. So really, it hinges on that disinflation continuing and lessening any kind of policy-induced recession odds. But I do think it's been interesting to see long end yields move higher. Really, since early May, they've moved higher by 70 basis points. And it's not really about shifting Fed expectations, because the 2-year has gone nowhere during that moment. So it seems to be about 20 basis points higher inflation break-evens, maybe just related to commodity prices moving higher at that time. And then real rates, it might be a combination of just technicals in the bond market, a little bit less demand from foreign investors, and a lot more supply, as we heard last week.
All right, that's an important opinion that we are tracking. But let's now talk about all of the cues that you should really look at before we get into this fresh trading session. We have Ekta, Surbi and Nigel all joining us now with the trade setup and all of the individual stocks that you should have on your radar as well. Guys, a very good morning to all of you. Ekta, coming to you first. We ended very close to that 19,600 kind of mark. Take us through how, what the cues are looking like this morning.
Thanks for that. Well, yes, definitely, the markets did manage to build on what we saw in Friday's trading session. So But we did have the Nifty bank underperforming. However, the mid-cap index rose. So it was largely a mixed session, but the Nifty and the sensex did build on those Friday gains. Now, one aspect which one needs to really monitor is now the FII flows. So the FII's net sold close to around 1900 odd crores in yesterday's trading session. They have sold for the 8th consecutive session and have sold continuously since the 27th of July. Now, FIIs have net sold over 10,000 crores in just these past 8 sessions. So one really needs to monitor what the trend would be going forward and what the long-term impact would be. Remember, this is something that Jonathan Garner mentioned to us, speaking to us last morning, that flows and FPI flows into the Indian market is something that they would be monitoring quite closely. Now, in terms of the global markets, the US markets did snap the 4-day losing streak, so that's definitely positive. There's some strength come back in the US. CPI data on Thursday for July is estimated at around 3.3%. Asia mixed ahead of the Chinese trade data. Crude prices have come off, which is a positive. GIFT Nifty is indicating a lower start. A couple of key points to watch for. The Bank Nifty, the underperformance that we saw yesterday, the mid-cap index, which managed to outperform. Pharma stocks continue to be in focus because of a whole host of numbers that they will be reacting to. And a lot of this interest in new age stocks such as Paytm and Zomato, which we saw yesterday, probably continuing into today's trading session. Hindalco, Coal India, Siemens will be releasing numbers today. RBI policy 10th of August, Thursday, but the 3-day meet begins today, so all eyes will be focused on that as a trigger.
All right, that is a lot of cues for us to track. Ekta, thanks a lot for laying out all of those out for us. But let's also talk about the individual stocks that you should watch today. Sebi has that entire list, and it is just earnings non-stop. Sebi.
It is, and last leg of earnings season, so a lot of numbers coming through. Let's start with Godrej Consumer. The revenues came in at 3,450 crores, EBITDA came in at 643 crores, and margins came in at 18.6% versus a poll of 19%. Tata Chemicals, the revenues were up nearly 6%, EBITDA was up 3%, margins came in better than expected, came in at 24.7%. PB Fintech, the revenues were up 32%, and the PAT losses have reduced by 94% to just 12 crores in Q1. MedPlus, it was a strong revenue growth on a year-on-year basis. However, margins and profit were flat. Revenue was up 29% on a year-on-year basis, and margins came in at 5.6%. Gland Pharma, the numbers are better than expectations. Revenues are up 41%. Margins came in at 24% versus 32% same time last year. And lastly, Torrent Pharma, revenue and margins are pretty much in line with estimates. Profits are better than estimates. US sales has come in at $36 million, in line with the estimate of around $33 to $35 million.
All right, Sebi, thanks a lot for taking us through that entire list of stocks. We're going to watch for all of these. Finally, it's over to Nigel. Nigel, how are things looking on the FNO side?
Well, on the FNO side of things, the FIs, they've lightened their positions both on the long as well as on the short side. The short position, though, continues at around 55%. So in the long-short position is in that ratio of around 45 to around 55%. On the option side, well, they bought more calls than puts in yesterday's trading session. While on the writing side, they wrote almost an equivalent amount of puts as well as calls. Let's look at the options data then. The put writing was quite active yesterday, 19,500, 19,550. Between them, they added close to around 80 lakh shares. So there was some sense of writing on those levels, which brings us to the levels then, because if there was writing at around the 19,500 put, then you're looking at support at around 19,460 on the downside. The bulls, they'll feel good if, in fact, we can get past the 20 DMA. For the time being, it's a bit away from current levels. So that's a crucial mark that you need to look at. And on a closing basis, you'll want the Nifty to go ahead and conquer that and then maybe make a little bit of a charge towards that 20,000 odd mark. For the time being, that's around 40 points away. Now, today's the Nifty Financial Services Index expiry as well. So that becomes very, very important. The 20,000 put on the put side has the highest amount of open interest. Yesterday as well, it was fairly active. So on the Nifty Bank, you're looking at around 19,950 mark. That'll be a bit of a support zone. For starters, I think the GIFT Nifty was suggesting that we're likely to see some bit of red to kickstart trade. So let's see where we go from there. Back to you.
All right, let's see where we go, Nigel. Thanks a lot for that. In fact, speaking of the FNO space, we do need to take a short break. But on the other side, we're going to get you some very important news because market regulator Sebi is set to review rules governing the futures and options segment. So we are tracking all of the details in just a bit. Welcome back. You're still tuned into Power Breakfast, and let's bring you some very important news now, because market regulator Sebi is set to review rules governing the futures and options segment. In its annual report, Sebi has said that they will be reviewing the eligibility criteria for introduction and continuation of stocks in the F&O segment. So Yash is here with more details on this. Yash, why this review, and also, what could be the implications of such a move?
Sebi has been faced with this constant question on why certain stocks, even when they fulfill the eligibility criteria, do not come under the F&O segment, or when they miss the mark, they're not excluded out of it. Now, to answer that question, Sebi's annual report has made some very important observation. What Sebi said in its annual report is that they will review the eligibility criteria for introduction and continuation of stocks in the F&O segment. Now, as far as Sebi's stand is concerned, essentially derivatives where the underlying stock fulfills certain eligibility criteria, in that case, the stock gets included under the F&O segment. This is expected to happen as soon as the next review cycle itself. We'll have to wait and watch what stocks get included, what stocks get excluded. But of course, there are certain stocks always which are in the question of getting included or excluded. Now, to quickly take you through what are the 4 important eligibility criteria. One is a stock is chosen from top 500 listed companies for average daily market cap and average daily traded value for the past 6 months on a rolling basis. Median quarter sigma order, that value should not be less than 25 lakhs in the last 6 months. Also, market-wide position limit in the stock shall not be less than 500 crore. And finally, average daily delivery volume in the cash market shall not be less than 10 crore for the previous 6 months. These are the current 4 criteria which are needed for the stock to get included in the F&O segment. What we've been given to understand from our sources is that Sebi may look at altering these 4 points to include or subtract some points to make the system more efficient. There's also another proposal that Sebi may look at, which is auto inclusion or exclusion of stocks from the F&O segment. Just like Nifty inclusion and exclusion happens, straight away if any stock ticks all these 4 criteria, then it automatically gets included or excluded from the F&O segment.
All right, Yash, very important details. Thanks a lot for bringing us up to speed on that. But let's also move on and bring you some very important voices from the corporate world. Speaking to Shireen Bhan at the PwC Global Dialogues, we had Maruti Shashank Srivastava, who says that the four-wheeler maker is the market leader in the 10 to 20 lakh rupees segment. He also discusses Maruti's growth plans going forward.
Maruti Suzuki in the sub 10 lakh segment has a market share of 62%. So people say you will never going to operate in the 10 to 20 lakh segment. I'm happy to share that in the 10 to 20 lakh segment also Maruti Suzuki is the market leader today. Although the market share is not as high. It is, you talked of preference changes. In this year, people said SUVs are something which we are not, we are only into hatches. Yeah. You will be happy to note that in July, we were the #1 manufacturer of SUVs in the country. So things are changing. We have now just launched the Invicto, which is in the 30 lakh range, which is something which people said Maruti Suzuki would never. But this is all because we are following that camp of the consumer. Very importantly, not only innovation, I would have liked to, if time had permitted, would talk about innovation. But I would also like to say that brand building is also getting into, because at that levels, you have to have the brand trust of consumers. If you are able to price your products and therefore have sustainable growth going forward. I think it's Maruti Suzuki 5 years down the line. I mean, first you see 5 years back what it was, and now, of course, it's a significant change. And I think 5 years later, it could be a totally different ball game altogether.
Okay, it could be a totally different ball game in 5 years from now. That's the word coming in from the Maruti management. But on the sidelines of the same event, that is the PwC CEO Dialogue, Shireen also spoke to Dixon Tech's Atul Lal, who's of the firm view that import curbs on laptops is a very positive step. He also asked that the Indian domestic industry will take just around 6 to 8 months to really ramp up production.
You see, for electronic manufacturing industry, we are of a firm conviction that this is our inflection point. In our industry parlance, we call it our Y2K moment. Please appreciate, anywhere around the globe, right from Japanese history of Meiji transformation or chaebols of Korea, you need state intervention, you need some hand-holding. in the stages of infancy of any industry. And we firmly believe that government policy framework is absolutely aligned in that direction. Specifically responding to the laptop and the IT products being covered now under licensing. So there are various viewpoints to it. But from the manufacturing industry, we are of a firm view that this again is a positive step. Please appreciate the Indian domestic industry, manufacturing industry, will take just 6 to 8 months to ramp up the production. And in the intervening period, the government is coming up with the requisite policy interventions to ensure that demand is met, either through imports or enhancing local production. Please be rest assured, the industry has adequate bandwidth to manufacture at a cost which is comparable to the global manufacturing companies. It's also ensured through the IT PLI 2 that the requisite value addition will keep on enhancing year on year. And I'm very sure that in 3-5 years, you'll have some Indian solutions coming out.
All right, that is a very optimistic sounding Dixon Tech speaking to us about the import curbs on laptops and telling us that the industry will step up in no time from now. But with that, we do need to get into a short break. And on the other side, we're going to shift focus from equities to the world of commodities and tell you what's going on. Welcome back. You're still tuning to Power Breakfast, and let's now talk about the commodity space. Manisha is here with us. Manisha, good morning. What are you tracking today?
Thank you for that, Pavitra. I'm looking at the crude oil prices where the summer rally seems to be taking a bit of a breather right now. While the prices are still trading very close to the 4-month highs, we have seen the strength in US dollar and especially the economic data that's expected out of this week continue to weigh onto the markets. So it is going to be about the China trade data today, and then you have China inflation numbers coming in. The US inflation numbers also come into this week itself. So ahead of that, there is strength in US dollar. Not just the crude oil prices, there is some pressure that we've seen in metals as well. So whether it's copper, steel, aluminum, iron iron ore, all of that seems to be trading slightly on the weaker side right now. The markets will also watch out for the China stimulus measures, which the street is anticipating will perhaps be announced in this week itself.
All right, Manisha, thanks a lot for bringing us that quick update on the commodity space. But let's also bring you some details from the Parliament monsoon session. Rajya Sabha passed the Government of National Capital Territory of Delhi Amendment Bill with the support of 131 MPs. According to this bill, the central government will now have full control over the bureaucrats in Delhi. Union Minister Amit Shah said that the bill would ensure corruption-free governance in the Union Territory. However, Delhi's Chief Minister Arvind Kejriwal opposed the decision and called the bill unconstitutional. He also added that the BJP government is trying to enslave the people of Delhi and it is an insult to their right to vote. All right, those are all of the updates that we're tracking on this edition of Power Breakfast. On that note, we're going to wind down with the news that most Asian markets are in the red. The open for our own markets looks like it is going to be a little bit lower as well, around 35 points odd. But thank you for tuning in. We have Bazaar Morning Call up in 2.